Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to talk about platinum, electric vehicles, and catalytic converters. So if that's something that interests you, definitely stay the whole time. We're going to dive in here. I'm going to show you how bad the platinum group metals are going to be in terms of market deficits. So let's jump right in. I'm going to go right off the bat. We got Europe leads the way in new electric vehicle sales. We've got massive, well, not massive, 10% market share of new vehicle sales, which isn't that much, but they also have, and China's second, and China and Europe both have natural gas problems. Funny how that is. And as we ramp our US, I bet you we're going to see natural gas prices start to rocket higher as well. But that's the new global electric car registration. So here's the US electric vehicle sales forecast from 2019 to 2028. And you can see this thing ramping up. And remember, this is a percent of new sales. It doesn't mean that we have 5% of all the cars out there. This is 5% for 2022 of all new car sales only. Very little electric vehicles. So we're going to go down here. It says new climate goals are going to need a lot more minerals. And they're talking about electric vehicles and renewables. And just a couple things I want to hit on here in this article is the demand for lithium, for example, is expected to grow 70 times over the next couple of decades. But the supply from existing lithium mines and projects under construction can only meet about half the projected demand this decade. So we've got a big mismatch between demand and supply. Batteries for electric vehicles and renewable energy storage are the biggest factor driving the potential mineral shortage. An EV requires 6 times more mineral resources than a car that runs on fossil fuels. Cobalt, nickel, graphite, and manganese are essential for batteries too. So looking at some of these projections here, we'll start with rhodium AutoCAD. Let me go down here. I think I started here. So here's LMC Auto LDV ICE hybrids. So these are hybrids of internal combustion engines with a battery. When you look forward, we are ramping the hybrids up in every single country much faster than battery electric vehicles. If you look at the left-hand side, this is 20 million vehicles up here by 2025. If we were to go back, and I know this is just US electric vehicle sales, we're looking at 3 million by 2028. So 2025 is 1.5 million battery electric vehicles. Looking at North America here, 2025, it's a little bit, it goes from about 5 million to 7.5, about 2.5 million. So a little bit over double money's going into LDV ICE hybrids. So looking at, I'm going to go up here, global auto catalyst demand. I know a lot of people, they tell me platinum's going to be reduced because we've got all these battery electric vehicles coming. Here's some data here. It's the global auto catalyst demand, and it is rocketing higher from a left to right movement. They are loading the hybrids, these guys down here, with a lot more loadings of palladium, rhodium, and eventually platinum. And we'll get into platinum as well. But these are the PGM demand rocketing higher over time. So I'll read this. It all sounds great for emissions, but wait, it ends up their unique complexities with hybrid vehicle emissions. Any car with an engine, gas or diesel, is in a stressful emission condition under what is called a cold start when you first start up. Starting a cold engine is when the emissions are highest. Hybrid vehicles are constantly turning their engines on and off, creating a more stressful condition. Even worse, I'm told, is having a hybrid running under battery that gets to full speed, and then having to convert over to the engine, starting the engine cold at full speed. The new real-world testing conditions capture this type of event by design. It forces the big auto designers to add more platinum group metals to counteract these transient spikes in emissions. The data I have collected from car makers shows hybrids' PGM loadings 10% higher than a conventional vehicle. So here's the forecast LDV sales in millions of units. Looking at 2020, 7% vehicle growth still to come, all the way out in 2036. Peak PGM emissions control vehicle demand 2028 to 2034 timeframe, according to most analysts. So let me see over here. Okay, we're going to go down this way. So looking at fuel cell vehicle penetration limits. So we're talking about fuel cells. It says there is not enough platinum in the world to go too big on LDV. In my analysis, we need it instead for heavy duty and hydrogen generation. Every precious metal analyst in the world agrees that I have talked to. Penetration rates less than 5% with existing global mine infrastructure. So that's for fuel cell vehicle penetration limits. Average vehicle age is growing. The average vehicle life continues to grow. This helps reduce demand and delays the recycle supply. Regardless of the zenith in ICE vehicle demand, peak PGM demand is likely beyond that point. Regardless of the vehicle count, the emission standards are likely to push the demand of PGMs higher, even as battery electric vehicles take a greater market share. So here's the PGM supply landscape. South Africa, Bulchveld complex. This is where the majority of it is mined. Over 75% of platinum and 80% of rhodium comes from one region, South Africa. Where the world's largest reserves of PGMs are found, only 55% of palladium comes from South Africa, with mining growth coming from Russia and North America, where palladium and some platinum are a byproduct of nickel and chrome mining. We are exceeding our current mined plus recycled supply of rhodium and palladium today. Above ground stocks include investment populations like ETFs, have been greatly diminished, satisfying current demand. Here are those Siboney Stillwater, Impala, Lonmin, now Siboney, and M plants. These are the production over time. And 2021, 2022 is about where we are right here, and it's declining. 2021, 2022, declining. 21, 22, right in here, goes up a little bit. And then after 2023, it declines for Impala. In Lonmin assets, that one's declining the entire time. What does this mean? It means that these producers of platinum are in production declines. They are declining production, and it's already hitting us. Looking at vehicles lasting longer, impact on the recycle. They're lasting longer, so we're not going to be able to recycle these as quickly. Here's the, okay, I already talked about that one. As a result of increased PGM loadings to meet tightening global emissions standards and increasing more difficult emissions test conditions, prices of palladium and rhodium in particular have grown 3x and 6x respectively since January 2016. It's much higher than that. This article is a little bit older since they were still in 2019. But here's the palladium demand going from left to right, and here's the rhodium demand moving up quite a bit. So coming on up, we've got some stuff I want to talk about here. It says the most pertinent discussions surround this of the topic of platinum for palladium design swaps. In gasoline engines, you can alter the ratio of platinum to palladium and still get the system to work. The swap may not be a perfect one-to-one, but it is possible. It has been done in years past. The complexity currently for the larger auto OEMs is that the design emissions criteria is now so difficult, and the ICE engineering resource pool is suddenly smaller. One key complaint from OEMs is that ICE engineers are being transferred to BEV and PHEV applications, so fewer engineering resources and tougher design targets. The view in multiple conferences is that alternative design swapping platinum for palladium in the ratios, relieving some strain on the stressed palladium market, will come by model year 2023. Here is the Palladium Forecast versus competitor reports forecast, and 2023 is when they think that the platinum to palladium design swaps will come in. So coming on down, this is kind of the conclusions from the article. It says, we're just getting started. The global shortage is going to get worse through 2023. The PGM demands will only grow even if global vehicle demand stays flat. Emissions are getting tighter and tighter. Testing conditions like the RDE are only going to propagate into additional regions. Just now, they're rolling out in China and EU. Rhodium today is essential for NOx reductions, design work. So I'm going to go straight to global auto catalyst PGM recycling for decades has been key to connect supply with demand. That's one big hit there. BEV penetration is too slow, and it has its own global problems. The CO2 footprint is creating these lithium-ion batteries is astonishing. Coming down, ICE engine vehicle demand requiring catalytic converters is projected to have roughly 7 to 10% additional growth upside over the next decade before BEV penetration rate turns the ICE vehicle demand curve over. It's about a decade. Fuel cell vehicles penetration is limited by the available global supply of platinum. Light-duty penetration rates would be small even with aggressive propagation initiatives. Note that gasoline autocatalyst designs are palladium-rich, where diesel catalysts are platinum-rich. The autocatalyst swap for fuel cell catalyst platinum is not one-to-one on gasoline. The swap on heavy-duty diesel autocatalyst platinum for HDV fuel cell platinum is far more in balance. So they're talking about 2023 using more platinum in gasoline engine designs. So coming on down, there's a bunch of depleted palladium ETFs and rhodium ETFs. They're all depleted here. Coming in down here, triggering more platinum mining will be needed to grow fuel cells in the hydrogen economy. Simply put, we need more platinum starting in about 15 to 20 years to meet a large slope of PEM fuel cell demand. We are in time to trigger these additions. However, we are too late to trigger expansions not already triggered in the existing PGM pipeline for new mines to satisfy autocatalyst demand. Again, it is nominally a 10 to 15 year funding to production timeline, so it is already too late. The next best option is to push for incremental output gains from existing mining resources to get more quicker from assets already in place through incremental expansion of existing infrastructure. What does this all mean? It means that platinum is going to substitute palladium. Probably 2023, we're going to see this action get more substitutions. We are in, I think, a very sweet spot for this. And what I'm going to do is I'm going to go to TradingView and show you the chart real quick on platinum. And so what I do is I look at that. That's kind of the fundamentals behind it. And I've got platinum pulled up here. You're going to lose me. Here's platinum, the 1, 2, 3, and then we're going to break to the upside. We broke to the upside. We're coming back to do a retest of this pattern, this wedge pattern. Zooming in on the right-hand side, we're coming back and doing a return move from this ascending wedge pattern all the way back to maybe even something down here. If we get down there, I think that is an incredibly good buying opportunity for platinum. Now, looking at some of these ratios, and what I want to see is the ratios start to turn as well. So I'm going to scroll down to use the platinum to gold ratio. I'm going to zoom on out, put it in logarithmic, zoom out. We have a descending wedge on the platinum to gold ratio. We are breaking to the upside, signaling that platinum will probably outperform gold over time. Looking at the platinum to palladium ratio, we are right up on, we're in a huge downtrend. We're starting to come on up and try to break to the upside, signaling that platinum may outperform palladium over the short term. And maybe even the long term. So here's platinum to silver. Platinum to silver, again, actually, let me zoom out here to give you guys a better picture. It was all the way up at around 150 ounces of silver to 1 ounce platinum. We're down to 41.29. It's starting to come on up. And if we break this downtrend line, that means that we are going to outperform against all of the other platinum or all of the other precious metals. So what I'm seeing here is I'm seeing very good ratios for platinum. It's the cheapest of all the precious metals. We've got problems coming up in front of us. We're going to have substitutes for platinum, for palladium, because the ratios and price difference. And I think we're already seeing that happen in China and some of these other areas when you start looking at some of the demand. And we got it right here on a return move coming back for platinum on a breakout. So we broke out. We're coming back to do a return move and test that breakout. That is where I like to buy. That's what I'm buying here. I'm buying physical platinum. I am not so much keen on the producers because if you looked at that in this presentation, you could see that they're declining production. Sure, they might make more money, but I like stuff that is a little bit less risky. And if something happens in South Africa in terms of energy, I'd rather just have the physical metal. That's just kind of my take on it. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.